Good morning, sir. I am Weezo, the actress in the theater of Misser in the evening. I am also the new staffer in the accounting department during the daytime to enhance my earnings. Because you are my immediate supervisor, I came to you to get answers to some accounting questions.
Good morning to you. If you are Weezo, I am Hamdi El Margani of the same theater. Please start your questions on heartbeats or otherwise. Asra, my wife, will interrogate me violently at home and everywhere and may cause me physical injuries.
Why Asra would be mad at you? Do you see me perform belly dance for you?
This is how she is. Please start your questions.
Okay, what is the objective of the general purpose financial reporting?
The objective of the general purpose financial reporting is to report financial information that is useful in decision-making about providing resources to the reporting entity.
To whom and how financial information is useful in decision-making?
Present and potential investors, lenders and other creditors use financial information to make decisions about buying, selling or holding equity or debt securities, providing or settling loans.
Could you please identify the components of the information reported?
The information reported relates to two groups. Group A relates to the entity's economic resources, called assets, and claims to them, called liabilities and equity. These together is called the financial position, and Group B relates to changes in those resources and claims.
How does the information about economic resources and claims mentioned in Group A above help present and potential investors, lenders and other creditors?
This information helps to 1. Evaluate liquidity, which is the ability of a business to meet its short-term obligations when due. 2. Evaluate solvency, which refers to the business' long-term financial position, meaning the business has positive net worth and ability to meet long-term financial commitments. 3. Evaluate financing needs. And 4. Evaluate the probability to obtain financing.
How does the information about changes in economic resources and claims mentioned in Group B above help investors, lenders and other creditors?
Before I answer your question, please note that users of financial information reported need to differentiate between changes in economic resources assets and claims liabilities arising from 1. The entity's performance appear in the income statement, and 2. Other events and transactions, such as issuing debt or equity securities appear in the balance sheet. To answer your question, information about financial performance is useful for 1. Understanding the return on economic resources, its variability, and its components. 2. Evaluate management. And 3. Predicting future returns.
Is there any requirement for the general purpose financial statements to be useful to external parties?
For general purpose financial statements to be useful to external parties, it must be prepared in conformity with accounting principles that are generally accepted in the United States, GAAP. By the way, if you are a candidate for the CMA exam, please note that the CMA exam also tests some knowledge about international financial reporting standards, IFRS. When international standards diverge significantly from US GAAP, the differences are highlighted in the outline. Please also note that if an exam question does not distinguish GAAP and IFRS, use GAAP.
Thank you, ya goes El Set Asra.
You are welcome, Imo Odaba.